If you're thinking about buying your first home in Southcoast Massachusetts, you've probably felt this already. Everyone has advice. Your parents say wait, your friend says rates are too high, TikTok says the market's crashing, and the news says it's the worst time to buy. And suddenly what should feel exciting starts to feel overwhelming. Here's the problem. Most of that advice is national, and Southcoast Massachusetts is not a national market. It's not Boston, it's not Florida, it's not Texas. We're a coastal, inventory limited, lifestyle driven market with specific dynamics. So today, I want to break down the 5 biggest myths I hear from the first-time homebuyers here locally and explain what actually matters instead. Because when you understand how this market really works, fear drops and confidence rises. Let's start with one that sidelines most people. Myth number 1, you need 20% down to buy. This belief quietly keeps first-time homebuyers renting for years. I can't tell you how many people say, we're trying to get to 20% first. That is not a requirement. There are conventional loans with lower down payments. There are FHA programs. There are VA options for veterans. There are first-time buyer programs available as well. But here's what actually matters. It's not the percentage. The real questions are, can you comfortably afford the monthly payment? Will you still have reserves after closing? Are you stretching or are you stable? In towns like New Bedford, Dartmouth, Fairhaven, Mattapoisett, and Westport, price points vary wildly. For some buyers, putting more down makes sense. For others, preserving cash and getting into the market sooner makes more sense. Waiting to feel perfectly ready often costs more than starting strategically. Myth number 2, waiting for prices to drop is safer. This sounds logical. If prices are high, I'll just wait. But here's what most first buyers don't realize. Southcoast Massachusetts has structural supply limits. We're bordered by coastline, we have conservation land, we have zoning restrictions, we cannot expand endlessly. That changes how pricing behaves. In markets where builders can flood inventory, prices swing more dramatically. Here, inventory grows slowly. So even when demand cools, desirable homes often hold value. And let's say prices soften slightly. What if rates rise at the same time? Your payment may not improve. Or what if the rates drop? More buyers re-enter the market. Competition increases, and now you're bidding again. The better question is not, will prices fall? It's, am I buying with long-term horizon? Myth number 3, spring is the best time to buy. Yes, more homes hit the market in spring, but more buyers do too. More competition, more emotional bidding, less negotiating power. Now compare that to late fall or winter. Fewer listings are around, but also fewer active buyers. And sellers listing in January, they're usually serious. There is no universally best season. There's only leverage, and leverage shifts. Myth number 4, price per square foot tells you the value. Price per square foot is a tool. It is not the full story. 2 homes can both be 2,000 square feet. One is walking distance to the harbor in Fairhaven. The other is inland with no neighborhood identity. Same size, vastly different demand. Price per square foot ignores water proximity, lot size, future development, school perception, neighborhood reputation, layout efficiency. In coastal towns, location premium matters more than extra square footage. The right street often outperforms a bigger house. Myth number 5, if rates drop, prices drop. This one confuses almost everyone. When rates drop, affordability improves. When affordability improves, more buyers enter the market. When more buyers compete in a supply-limited region, prices often rise. Rates influence behavior. Supply influences stability. Demand influences pressure. Understanding that relationship keeps you from reacting emotionally to headlines. So if you're a first-time homebuyer in Southcoast Massachusetts, focus on 3 things. Financial stability. Can you afford the payment comfortably? Do you have reserves?